So we like to understand how you made it successful also. As India Infoline, you are into multi-products, housing, gold loan, MSME and other areas also. And I was seeing your investor presentation, I think you have, 20,000 crore of co-lending size in the overall co-lending space. I hope it will be the largest in the industry, a single NBFC group actually. So we'd like to understand from you how you made it successful. And the followed question is that many of the NBFCs are not participating still in the co-lending space. So what are the challenges and possible solutions which you think so that the others should also participate?
Sure, sir. First, I'll speak about my own company. So as you mentioned, IIFL Finance is a large listed retail-focused NBFC. In March, we had about 75,000 crores of AUM. Out of that, 15,000 crores was in co-lending. Mainly thanks to partners such as Central Bank. They're a large partner for us. And in the earlier session, some of the panelists also mentioned private sector banks are shying away from it. But fortunately, that's not the case for us, sir. We work with at least 6 private sector banks in co-lending, with full tech integration. Now, why we love co-lending is, I'll just give a brief history. IIFL Finance as an NBFC is actually just a big startup. It was started by Nirmal and Venkat 18 years ago, the lending platform I'm talking about. So we are not corporate backed. For us, the stated growth strategy is grow asset light, just like a startup, right? So you don't want too much on your balance sheet. So when in November 20, the guidelines came for the new avatar of co-lending, it was a huge thing for us. Just 2 months later, in Jan 2021, we set up a dedicated cell for co-lending. The only thing I've done in the last 4 years is co-lending, sir. So, so you can see how important it was for us. The other aspect is, the other thing you're asking is why some of the other NBFCs have not taken to it. I can only speculate. I can think of 3 reasons. One, some of the larger NBFCs are corporate backed. So their cost of capital is almost as low as that of a small bank. So perhaps they don't need it. The second one could be some of them are deposit taking, so they have alternative and cheaper sources of capital. On the other spectrum, if you look at some of the smaller NBFCs, probably they're too small. Just like how in a term loan, you're looking at certain credit rating, certain size of AUM. I remember when, every NBFC has to go through the same proposal process for co-lending, right? So most of the banks have some sort of optimal size, maybe 1,000 crores AUM, 5,000 crore AUM, or a BB rating. So maybe some of these NBFCs are still young and they are probably not qualifying yet, and hence they would rather work with a larger NBFC than go straight away to a central bank. That could be the second reason. The third one, I'm just speculating, because every time we have done a tie-up, banks do take a lot of time in both physical and in data checks in terms of due diligence. So the NBFC has to be ready to open their books. They should be ready for the several due diligence that happens. Maybe they're not comfortable or they're not ready yet. So I could think these could be the reasons. So once they are fixed, I think there'll be more players.